Nigeria's insurance sector presents mixed fortunes in the latest half-year results, with Nnenne, AIICO and MBENEFIT posting contrasting performances across revenue, profitability and underwriting. While all three have cleared the recapitalization hurdle, earnings quality remains a key differentiator. Nnenne delivered stronger profits despite lower revenue. AIICO recorded broad-based growth, while MBENEFIT faced rising claims and weaker earnings. We examine what these results mean for investors and the sector. Nnenne Oyo, Investment Research Analyst, Meristem Securities, joins me for more on this. Thank you so much for joining us today.
Thank you very much for having me today.
All right, so let's begin with the very first thing, which of course is your general overview of the results that we are reviewing today. Nnenne, AIICO, MBENEFIT. Talk to us.
I mean, based on what we've seen in the results so far, we can see that, volatility in the sector, particularly in this H1 2026 results compared to H1 of the previous year. And this is actually not, surprising considering the sector and the operations in the sector, given the low penetration of insurance in Nigeria as a whole. So, however, we have seen that, how these companies are able to use their risk pricing, their efficiency in underwriting efficiency to support their underwriting profits, which is the insurance profits, while also using investment decisions based on the decisions they make for their investment income to also support their bottom line for the company in general. So we have actually seen that play out in the results of these companies that actually released their financials.
You know, when you look at investment income, it's a lot for some of them, and you're wondering if this investment income, was not there, what would have happened to them? But we'll come to that. So talk to us. I mean, all three companies that we're looking at today, they scaled the recapitalization hurdle. Was this something you expected? Were you probably worried before now?
I mean, right before when the recapitalization exercise all just came out, we at Meristem, we had published a report in 2025, assessing these companies and looking at some that may be at risk due to the higher minimum threshold of capital requirements. And during the analysis, we found out that these companies were never at risk because we're already operating above the minimum threshold set by NICOM based on the capital requirements. So based on that, there was no doubt or anything of that matter to suggest or to show that they were ever at risk or they will actually be like a burden to them in terms of meeting the recapitalization because we're already operating above the minimum requirements from NICOM.
All right, let's begin with MBENEFIT. So let me just quickly speak to the numbers. Now, revenue grew modestly by, 2.57%. Profit declined sharply by about 16%. And then claims increased by almost 40%. That's a whole lot. I mean, can we say the company's underwriting quality is probably under strain? Well,
to answer that, I would just say, okay, let's look at the historical performance. From 2025, or let's go to Nnenne 2025. They actually recorded reduction in their claims during that period. And now coming through to 2025 full year, we saw their claims, although it's increased, but when you look at their claims ratio, we saw that it's actually improved, which means their revenue growth was largely, enough to actually accommodate their higher claims. So for this H2...
H1?
Sorry. For this H1, this is basically more like, a one-off something, to say the least. As well, I don't really expect this to, be sustained because we've actually seen them have better underwriting efficiency based on their past results. And this H1 is kind of like the outlier from it. So this may just be a short-term lag, like a short-term occurrence that we expect that is going to improve after this period.
All right, so you don't think the management needs to maybe buckle up or do some things in that regard?
Of course, they'll need to do that. I mean, they'll actually need to buckle up in that regard, in the sense that for this to happen, it must have been maybe an underestimation of the risks, because when looking at their financials, they had to draw down on their reinsurance to, help manage the higher claims they had to pay on this period. So you can see that as maybe there are some things overlooked or underestimated that impacted the level of claims they had to pay. So this can also serve as a learning experience to management, to help further better their pricing discipline for future risks they are covering.
Pricing discipline, like increase their prices, something in that regard, so they can, because at the end of the day, when you generate revenue and then the claims you pay during that period is maybe even more than what you generated, that doesn't really look good. Yes, and I totally understand what you're saying. We need to reprice these things. But then remember that Nigerians, I mean, to a very large extent, when we look at some of the challenges or some of the reasons for which Nigerians do not embrace insurance, one of them is probably lack of enough cash, lack of enough money to do that.
That's why that's why when you have to filter risks in sense of, all right, based on the premium you're willing to receive, will it be sufficient or enough to cover these risks when it happens? Like I said, insurance penetration in Nigeria is actually moderate. So most people or individuals, they don't really get the full extent of insurance players in the sector. So that is actually something else that also they need to factor in their risk pricing, not just in isolation of the amount of premium they're collecting from their customers.
It's a lot of work they need to do because, I mean, away from Nigeria, insurance owns banks in other places. But here, I mean, banks own insurance companies. Of course, we have the holdco structure to sort of put some sort of sanity in all of that. Now, let's talk about AIICO. AIICO, for example, had very good results. Let's look at the fact that double-digit growth in revenue, PBT, PAT, but then the operating expenses sort of rose sharply. Should we be concerned about that? So it's just one of those things, really.
Now, the thing is, that is not really specific to AIICO. Following the whole higher oil prices, the coming back of inflationary pressure, most companies are also experiencing higher operating expenses, not just AIICO. Although, in the sense of AIICO, like you said, they've recorded broad-based growth, both their revenue as well as their profits. However, their operating expenses also rose sharply. So that's something that, the company can work towards. I mean, they've also had their higher expenses has been a major strain, particularly on their margins, as we've seen that while they've recorded increased growth in revenue, their margins have basically been declining from 2024 to 2025. So this also shows that, the higher revenue is not being shown or is not being filtered down to their bottom line due to the higher expenses. So although in H1 2026, we saw improvements in their profitability metrics. So now the question we are meant to ask, or what we look out for, is how sustainable these improvements will be all through the rest of the year. Are we going to see a rebound in their margins in 2026, or will it continue on that downward trend started from 2024?
All right, you have an upside target for AIICO over 40%. Do you think that, what's your take on that, really?
Yeah, I mean, looking at their performance, even as you've said, they, compared to the three companies, in terms of growing or expanding their insurance business, they were the top performers. Also, in terms of, their underwriting profits, that's their core insurance business profits, they also recorded the highest of around 10%. Then when you come down to their bottom line, although we saw a drag based on the decline on their investments income. However, they were still able to sustain profitability at double digits with their profits after tax rising by over 18% during the period. So when you look at all these fundamentals, we see that the company is actually sustaining its core insurance business, also even growing its business. So yes, I believe that upside is actually obtainable for AIICO.
All right, so let's talk about Nnenne now. Nnenne is actually quite interesting because when you look at some of the things happening there, we're seeing revenue declining by over 4%, but yet profit increased by almost 17%. And then investment income, of course, rose by nearly 50%. I'd like you to just talk to us. When I was speaking earlier, I was actually referring to Nnenne, a situation where in terms of, revenue, it wasn't all that, it was negative, but then investment income was able to then help things, support the result. Talk to us.
So I actually find that quite interesting also because, like I've said before, insurance business is not just about your underwriting efficiency. You also have to look through how you're able to use the available capital to support and boost your investment decision and also support your bottom line. So this is actually, that's what's actually seen play out in NEM. So although revenue declined for NEM during the period, we can see them use their investment strategy to boost their bottom line significantly, if I may say so, following the both, not just depending solely on the fixed income markets, considering how, conservative insurance players can be in terms of their investment decision. So we saw them, expand their base and actually gain from the improved rally we saw in the equities markets, where we saw their fair value gain appreciate significantly, alongside increase in also in their fixed income investments, adding also to the boost, thereby causing that significant surge we saw in their investment income. So yeah, like I said, it was actually very interesting for me. I mean, like the company was able to use their resources, their assets well to boost their bottom line, where their top line were a little shaky. So they were able to use other means available to them to support their bottom line and remain profitable in the period, even increasing their margins.
Absolutely, that was a good one. Now, I think we've talked about each of them. So when we come back, we're going to focus on comparison. We're going to break now. When we come back, we'll continue this conversation with Nnenne Oyo. Stay with us. Glad to know you're still with us. I still have Nnenne Oyo right here with me, and we are looking at results from NEM, AIICO, and MBENEFIT. They are H1 2026 results. Just before we went on that time out, I was saying that we're done, doing independent analysis of these companies. Now, let's put them together. The return on equities, return on assets, and even the EPS. I want you to look at, these three, compare them, and then maybe you give us guidance for investors moving forward.
That's their profitability margin. So like I said, there's still some level of volatility in the sector. So while some have been able to, maintain that consistent growth in their returns based on return on equity and return on assets, case in points like MBENEFIT, they've been able to, sustain that growth from 2023, 2024, 2025, except in H1 2026, where it declined following their poor performance in their H1 in the top line of their results. So we've seen fluctuating reports from NEM in particular, where we saw its increase in 2024, decline in 2025. So that fluctuation is still there, and now it's back up. We saw improvements on a year-on-year basis on their reports. However, for AIICO, we've seen that that drag on their profitability, as the higher costs have been eroding the metrics so far, where we have seen declines from that return on assets and return on equity from 2023, 2024, 2025, before improving in H1 2026. And when you look at the major driver of the improvements, we saw that their investment income declined during the period, which you can say the lower, which reduced the potential of their top line, and also helped them, help the bottom line to grow faster than their top line, causing the improvements we saw during the quarter. So based on this, we can see that their performance so far has also, supported the earnings per share, with NEM coming with the highest at 3 points, approximately 4 naira per share for NEM, which also saw an improvement during the period. We also saw improvements in companies like AIICO, where the earnings per share also improved. However, following decline in its profits, we saw MBENEFIT's earnings per share also decline during the period. So overall, we can just say that while these companies are still growing, and their top line are basically their revenue increase are basically rising at a good pace, we can still see the effects of cost drag down on profitability and also impact their margins, causing that volatility and drop in their profitability metrics.
All right, thank you so much. I wish we had the time, would have looked at guidance for investors, really what should be the next step for investors. But of course, we'll probably talk about that some other time. Thank you so much.
Thank you for having me.